Welcome to another Sharewise webinar. Hi everyone, I'm Wei Sim, founder and lead analyst at Homodeus Research, and today I'm delighted to be joined by Dylan Carter, CFO of Freelancer. The ticker is FLN and it's capped at around $50 million. Now, before we begin, I'd like to highlight three reasons why Freelancer is a company worth watching. Firstly, the company owns three high-quality digital platforms, each with leadership positions in their respective markets. Now, many investors may know Freelancer.com, but the group also owns escrow.com, the world's largest online escrow platform, and Loadshift, Australia's largest heavy haulage freight marketplace. Second, after 4 years of declining marketplace revenues, Freelancer saw mild positive growth in FY25. Now, this, in my view, points to early signs of stabilization, which could see a turnaround in the coming year. Meanwhile, the group overall delivered record NPAT, record operating profit, and continued improvement in operating and free cash flows. And thirdly, Freelancer is very well capitalized with almost half of its market cap in cash. And they have some big hitters on their board, including Patrick Grove, CEO of Catcher Group, and Craig Scroggy, CEO of NextDC. Those of you who joined the button call that we had yesterday would have also heard how complimentary Rail was of Freelancer partnership. So with that, it's my pleasure to hand over to Dylan. Dylan, thank you very much for joining us today. Floor is yours.
Thanks, Wei, and it's a pleasure to meet everyone on the call. So thank you for spending the early morning, yeah, around Australia dialing in. I'm over in San Francisco, so it's a pleasure that it's my afternoon, but your morning. So thank you. I'm Dylan Carter. I'm the new Chief Financial Officer at Freelancer Limited. Joined a couple of months ago, and so I thought this would be a really good opportunity just to introduce myself, but also to really reintroduce the business. I might share a couple of slides if that works, Wei, and then I'll explain a bit about the business.
That'd be perfect. Thanks, Dylan.
Let me make sure I've done this right. You can see that, Wei?
Yep, perfect.
So the freelancer business. I mean, I'll tell you a little bit about why I joined. Actually, maybe to start off with, I very much joined because I like to join companies that I would be an investor in. My background prior to this was another company, another listed company, payments business, and so I very much understood the escrow business that's in this group. But the thing after catching up with Matt, our CEO and founder, is it was really apparent that there's a number of strategic assets, like Wei mentioned before, and three different core growth engines with different growth drivers, inherent diversification in this business that is not really well understood. And so that was, I thought, a really good opportunity, and it's the type of investment that I myself like to look for, and that's one of the reasons why I want to join. More personally as well, I like to build things outside of work. I'm very technical myself, and so I've got an appreciation for the freelancers on our platform, and also the clients trying to get things done. And so it was sort of a natural synergy, coming into the business. One thing it'd be really good to talk today is about exactly that diversification across the group and some of our first half performance, and I'll kind of go through that now. Um, Taking a back step for a moment, our overall strategy for the business is what we define as the Amazon of services. In the same way that Amazon is the Amazon of products, we're very much a service-based business. We have category leaders, three core businesses, which are category leaders in each of their respective disciplines. In the middle there, you've got our what people mostly know us for, which is the Freelancer.com business, which is the number one global labor marketplace. That very much helps, over 90 million professionals around the world find work, and also a number of clients around the world also get work done. A very interesting business. There's over 4,000 different skill sets in that business, so a diversified group of individuals and customers that we service there. We also have the escrow business. Number one global escrow platform in the world. It's processed over 8.3 billion US dollars in secured transaction. That business is very much about, like most payment businesses, establishing trust and transparency and being an impartial third party in transactions. It's a business that's actually got licenses, as I was saying to Wei just last night, in 55 different jurisdictions in the world. That's a huge competitive moat for that business because it's very hard to get licensing set up in just one jurisdiction, let alone having 55. That enables us to do cross-border, that enables us to do different asset classes, and really the growth in that business is just beginning. And then we have the Loadshift business, which is the number one Australian heavy haulage. It is an Australian business today, only operates in Australia. It's sort of a demonstration of applying a marketplace model to a freight solution or a freight problem and customer need. The opportunity for that business is really about how we then take that platform and go global with it. The way that all three really interact is they operate off a common DNA. They actually share quite common technology infrastructure underpinning them, and they have a common way of connecting buyers and sellers in the different markets they operate. What's unique though is that having the three different units within the Freelancer group provides that diversification for our investors. About a third of our revenue in the most recent reported period was actually across escrow and Loadshift, and two-thirds is our core Freelancer marketplace. So quite often people, when I speak to them first, they say to me, I know all about freelancer.com, but they're quite surprised when I tell them that there's actually three different businesses that operate in the group. Uh, Another important reflection is that across labor payments and freight, we're operating in a significantly enormous target addressable market. Sorry. The trillion-dollar markets that we operate in, we're still a very small player, and a huge long run for growth in each of these. Trying to solve problems for labor, freight, and payments are quite complementary. A lot of the time, when you're dealing with solutions that require how do you find work, you do need to then provide the payments infrastructure underpinning it, in the same way that when you start a business and you then need to get something moved, we can then cross-sell that into our freight or our Loadshift business. So a huge addressable market, and strategic assets that we've built to service those is quite interesting. One of the things coming in as a CFO is I love a simple business model, and that's exactly what we've done. Across each of our businesses, we charge effectively based on the transaction activity. So we're very much aligned to creating activity on our platforms, and that's how we get how we're remunerated as a business. So we've got a simple fee infrastructure for both our Freelancer and Loadshift businesses, where we apply a 3% fee to the client or shipper and a 10% fee to freelancers or carriers. In an escrow business, based on the transaction, we'll charge a similar sort of margin on the transaction to be an impartial third party in that transaction. Our competitive edge really is around monetizing the critical business infrastructure underpinning it. So we see our strategy as not delivering these services, but rather actually being the platform infrastructure that supports each of these markets. If I go back here, each of these markets to actually operate more efficiently and better, and improve price discovery across the markets too. I'll briefly go over the board and management. I won't spend too much time, but we have a very strong board in particular, just like Wei mentioned as well. Listed, for example, Craig operates on NextDC as the CEO and MD. We've got Patrick and Darren, who have a lot of technology expertise, and a lot of people know Matt as an entrepreneur and founder with a very strong background in founding businesses. Really strong leadership there across our leadership team, everything from our technology through to compliance. Really strong, sophisticated team. A couple of recent changes that we made was around product and also myself. So I joined a couple of months ago as the new CFO, and Andrew Bateman has recently come into the position of VP of product. And that's really around putting some strategic focus as a business on both our product and our financial deliverability going forward. I'll summarize our H1 performance. Overall, like I said, the business operates on if we can improve transaction activity in the markets we operate. And what was a huge success for the period is that escrow.com, as an example, went up 54.6% in USD volume, and Loadshift also increased 9.6% in our in AUD volume, being a mainly Australian dollar business. That was two strong, really strong businesses that demonstrated that they've got product market fit and that they're improving in volume. And that translates into the revenue performance, as you can see the growth rates on the page there as well. Freelancer did have some headwinds in the period. There was some mixed performance, and I'll talk about them shortly. They are very much about operational and execution items that we experienced during the period, as opposed to any change to the underlying demand on the platform. And I think that's an important takeaway. At a group level, our overall GMV or gross marketplace value increased up to 574.6 million, which is a 30% increase in Australian dollar terms. But it's important to reflect that over 70% of our revenue is actually USD denominated revenue. So a lot of the change is actually translation back to Australian reported results. So the more appropriate driver, as we're now providing a bit more transparency on that, is the USD numbers of 403.8 million USD, which is up 45.5% overall. Like I said, we had some challenges in that freelance business, which are operational items, and I'll talk through those in a moment. The result of that decline on a USD basis, but also the escrow revenue improving year on year, up 30%, largely offset to be an overall USD growth rate of about 2.6, so broadly flat. On our reported results in Australian dollar terms is a 12% decline, but a lot of that, like I said, is translation. Three core themes for the period. One, which is new financial and product leadership, and that really is a result of some of the challenges that we've had in the period, which I'll mention in a moment. But escrow and Loadshift continue to demonstrate scale. And a very key pivot this period is that we see AI, and I get the question quite a lot around what's the impact of AI in business. And we actually have quite an opposing view to the market, which is we see it as a really important growth lever for us, both in terms of our internal capability and internal ability to push our product and make changes, but also the demand side for the business. It's a new growth vertical for us to provide talent for AI development around the world, where companies may not be able to invest in their own dedicated AI talent. In terms of our own internal capability, we've actually implemented three really important things. One is around tier one support. Nearly 100% of our tier one support tickets now go through AI first. 11% get handled end to end with no human input at all. And the second, and that will improve over time as we tinker and tailor to how we support those customers. The second is around our engineering. So we actually have an AI engineer that handles, one-shot AI development for a lot of low-value tasks, and that's enabled us to actually increase our throughput of code changes up 40% in the development team, which is a fantastic result and ability to be able to then pivot what we're going to innovate on quite a lot quicker. And the third, as I'll show momentarily, is around our actual product and how we leverage AI into the product itself to improve matching between freelancers and also discoverability of both freelancers and projects, and therefore improve liquidity on the platform. So really interesting use case of AI is actually a winner, an opportunity for us as a business. Starting off with Freelancer, we are, there were kind of a few different challenges in the period. One thing that is probably important to take away, though, is that AI, we look quite closely at AI and the impact on our business. And one important distinguishing factor is that if there was AI that was going to sort of, remove a product category, we would expect that there would be a compositional change in our in the types of projects that get done on our platform. The reality is we actually haven't seen, and if you compare these numbers on the right to what we reported last year, the proportion of our projects actually hasn't changed, and that gives us a lot of confidence that people still come to our website to get a website built. They still come to our website to get the digital marketing campaign put together. It is true that the nature of work that goes on the platform naturally changes, just like when mobile development came out, and every business therefore needs to pivot to adjust. We're no different. For us, people might get a legal contract written via Claude, but they still want a freelancer with technical expertise to review it. And quite interestingly, from our internal analysis, about two-thirds of customers that come to us for technical expertise. And so, you can imagine then that there's a lot of companies around the world who still look to someone like Freelancer to provide that skills gap in areas that they don't have today. AI is actually becoming a really important growth corridor for us. So about 7.4% of our GMV in H1 was actually AI development projects, which are spread across these different categories. And that's up from the first quarter, which was at 5%. So quarter on quarter, we've actually gone up 2.4% in GMV from AI related projects, demonstrating it's a clear demand, vector for us. On the supply side, it actually improves the productivity of our freelancers quite a lot. So they're able to do more complex work on the platform, and provide a high quality service to our customers, in the various things that get posted on the platform. A few challenges that we did have through the period, and sort of led to that reported result in Freelancer. One is, as you can see on the graph there, we had a huge spike in AI scrapers ever since the start in January. When you have that sort of uptick, you do need to work out how do you manage that new traffic, because it is effectively AI scrapers trying to take data from the site, and how do we make sure we stabilize our acquisition channels around that. Unfortunately, that parabolic rise led to some decisions that we needed to make around our SEO, which did therefore impact things early on. We are actively aware of it. We've addressed it. We know what we're solving for there, and we're already starting to see some really strong performance coming into H2 around how that traffic is now managed going forward and not impacting our SEO as it did during this period. The second is around security controls. So we noticed at the start of the year that there was a lot of AI agents trying to access the site, and other types of activity going on. We thought this was absolutely the right decision to implement two-factor authentication. The consequence was that there were some customers or returning users that might not still have access to their original email they used to sign up to the site. And so unfortunately, they did churn, even though they were a legitimate user trying to use the site. We do feel like it was absolutely the right decision to make. It improves the integrity of the platform, and is a great growth from here. But it was something that did impact the results. And the third that we discovered is looking at payments. I come from a payments background, and one of the first things that we looked into, quite interestingly, is we have a number of gateways that handle payments on our platform. As you can imagine, we're globally based. We have customers all around the world coming to us with different card types and different payment methods. Our healthy gateways quite clearly show an upwards direction in that green recurring line on the left-hand side. That's really demonstrating that customers are continuing to come back to our site and use us again and again. On some of our unhealthy gateways, despite having a common cohort, you can see that there was a bit of a blip around January this year when a consolidation happened on that gateway. That really shows us that the volume change was very much gateway specific as opposed to demand or internal specific. Even though we've got some of these challenges going on, we're probably, I think, one of the most innovative companies out there. We continue to deliver, things to improve conversion and the product experience for customers. Just a couple of examples here. This is our new landing page for the homepage with the purpose of trying to make sure that we help customers get through the conversion channel much quicker. We're tailoring our marketing to be a lot more vertical specific. So this is an example of one of our vertical specific landing pages for cosplay, which is something that actually gets used quite a lot on the site, oddly enough. And other verticals that we think are really important, like AI development and game development, are really key areas that are definitely defensive to any changes in the market and enables us to have a very vertical specific acquisition strategy to encourage growth in the right areas. So, what a good watch point for the half to come to see how that checks out. The third is, like I mentioned before, how we leverage AI and language models in our platform. It's quite interesting. We've now been able to leverage that, as you can see in some of the extra signal that we're putting on each of the posts. We can understand the customer or the freelancer and also the project and provide a little bit more clarity to the other user who sees that and encourage them to be able to pass through and commit to a purchase. Freelancers, probably one of the things I didn't realize coming in is that we don't just solve small problems, we're actually solving very much high value, big problems. So AI development, I've spoken a bit about moonshot innovation challenges. We work with companies like NASA and the US Department of Energy to help provide a global workforce or a global set of minds towards tackling scientific breakthroughs or other interesting challenges. That's an amazing innovation and one way that we demonstrate the skill talent that's on the platform. Field services, because of the breadth of our user base, we're actually able to deploy or enable companies to access a number of individuals or freelancers across a whole geographic region and stand them up to solve a problem, whether it's solving or fixing computers across India, as an example. And the fourth category here is around government partnerships. So we have established government partnerships and again, demonstrating our global reach and our ability to then leverage the platform to provide additional high value services. Turning quickly to to escrow.com. We've done about 8.3 billion US dollars over time. The most recent quarter was actually our fourth best quarter on record. As you can see from the graph, it's just continually going up, which is fantastic. We haven't had this sort of result since 2022, so we're really seeing some momentum, as Wei mentioned at the start of the call. We actually are really seeing this momentum come into the business. That momentum is largely around our domain name IPv4s and wholesale electronics. Domain names and IPv4s make up some of those core verticals, digital assets, which is a unique competitive advantage that we have in this business. But we are seeing some more physical goods like wholesale electronics becoming an important growth corridor for us, up over 2,000 or 1,700%. And we forecast that to become our second most valuable vertical that we go after domain names. Like I said earlier, it's a really important business, and it really relies on that licensing framework around the world that we have, particularly with that full US footprint that enables us to do interstate and also global type transactions. Loadshift, as you can see there, Loadshift has been doing really well over time. It is a smaller business than the others. This is the first time we've actually provided a bit more transparency as to the financials and also the underlying GMV performance. Coming in as a new CFO, I thought that was a really important question that I was getting from investors, and so it was an important thing that we broke out and showed. The strategy with Loadshift now is really that it's demonstrated its ability in the Australian jurisdiction, and how we replicate that code base into different jurisdictions and expand globally is how we scale that product. There's absolutely opportunity to improve award rates within Australia. We have over 40,000 carriers on the platform, so we've got the network there, we've got the liquidity, and we're continuing to drive growth. But we're also looking at making sure, and that's what we've been working on, that the underlying foundation is ready to be copied around the world. I've sort of spoken through a little bit of this. Probably the only extra item I'd say on operating performance for the period is we did report a $1.1 million EBITDA. That really demonstrates that despite having some challenges in that revenue line on an AUD basis, we did manage our OpEx accordingly. Had about 4.4% decrease in employee costs and about 5% decrease in hosting costs, primarily from negotiating on those costs. But we see some opportunity there as well in terms of actual server capacity. And admin spend has gone up about 26.7%. That's a large percent on a small number, but the small increase is to do with a lot of that token usage that we're now leveraging across the platform. So I think really good spend, to try and make sure we're still demonstrating. Overall, employee operating expenses were up 1.8%. One other impact just to our NPAT is around a $2.4 million impairment that we made. That was actually for non-core digital assets, so not impacting our core freelancer, escrow, and Loadshift businesses and intangibles. They are very much fully supported by our business plans, and very much supported by our projections. The non-core digital assets really was a strategic decision that for this business, we want to make sure we get those three businesses done right. And so we're going to keep the focus on those three businesses, and park for a while at least the non-core digital assets. And that's what led to that impairment there. Now, it is a non-cash item, and so it doesn't impact our cash flow. In terms of our overall capital and balance sheet, there's three real principles. We haven't really mentioned this before, but we have about 18 million of cash in the bank, and we are going to be very, disciplined. I come from a commercial background, and also a treasury background, so I'm very focused on making sure that we have an underpinning framework for how we manage capital in the business on behalf of shareholders. The first is around strong discipline around our treasury to manage against our user obligations that we have on the platform. The second is we do want to get back to consistent positive free cash flow, and that's around making sure that we invest in the right things, and also demonstrate that we're building cash reserves to make the right investments long term. And third is really having internal targets to achieve outsized returns on our investor capital. And yeah, that's probably a brief summary way of where we are. The overall outlook for us is really about returning that freelancer growth. We really have identified what those challenges are, and we've got solutions in play right now. And we're getting some very early confidence in numbers that we're seeing and early drivers underpinning those. That H2 should be a better half. Scaling escrow and Loadshift, when you've got one business that you're working on growing, you definitely want to not take off the acceleration in your really core performing businesses. So those are areas that we're definitely focused on continuing to make sure they grow, both escrow and Loadshift. And then obviously our operating leverage, so leveraging AI within our internal team, but also finding where are there cost efficiencies that we can run the business a bit more capital efficient going forward. But yeah, thank you, Wei. That's a quick overview, and thank you to everyone else on the call as well. Just a quick overview of the business.
Awesome. Thank you, Dylan. It's a great presentation, and consolidating what was a 100+ slide deck down to less than 20-minute kind of presentation is very helpful in helping us understand the business. Yeah, it's amazing, from cosplay to NASA, right? You guys have pretty much covered it all. So
It's one of the things, the business is very much, we do a lot of complex things.
yeah,
And so I think sometimes it's hard for the market to actually understand all of the things we're doing.
yeah.
But that those are all growth opportunities and growth catalysts for us. So it's important that we do try and get that message out there.
Yeah. There are a few questions which have come through. So the first one is, can you provide any granularity on the lower activity on Freelancer, and what are the KPIs you focus on for the Freelancer business in particular?
So, I mean, what we provided there was what we think is the right granularity in terms of the three challenges that we had, which is our
Mm,
SEO impact, the payments gateway impact, and also the security controls that we implemented and how that has impacted the business. We haven't provided additional disclosure into the specific numbers underpinning that, but those are the core drivers. The way we look at the business is how do we make sure that in each of those areas we're seeing tangible growth going forward into H2. And
mm,
so everything from award rates on how projects get posted to the site, and then get awarded to freelancers to service, through to payment conversion rates, which are acceptance rates. For example, healthy gateways get acceptance around 80% or 85%, whereas unperforming get about 30 to 35% acceptance rates. So that conversion metric is something we track quite closely, not just at a group level, but at an individual gateway level and also at individual card level. So make those sorts of metrics that underpin each of those challenges are the most relevant metrics for this period. As a group overall, we do look quite closely at how many users are on the platform and how often they're logging in, how often they're posting projects, when customers are actively engaged in projects all the time, like freelancers are constantly doing multiple projects, or they might be operating on, serving multiple clients at the same time. Those are the types of customer behaviors that we also track quite closely to see how we replicate that to other freelancers or other clients around the group.
Right.
Hope that's a good
And
answer.
and yeah, no, that's great. And in terms of the SEO and gateway performance right now, are you say you're tracking the metrics very closely. Are you starting to see some improvement coming through versus what we've seen in the first half?
Absolutely. Absolutely. So at individual gateways, we're seeing some tick up in terms of I mean, the main strategy around that is finding the right local acquiring solutions that we can redirect traffic to, as we know that those gateways will perform higher for conversion. We've gone through a process of identifying what are the right gateways that we should be using in different jurisdictions. We are starting to flow that traffic across there at the moment. And we're seeing the results of that in early stages. The second, sorry, there's a vacuum outside. I'm not sure if you can hear it.
No, it's okay.
Um, the second kind of, sorry, what was the second question again?
So we're talking about just the
SEO, I think. The
SEO. Yeah,
S
that's correct. Yeah.
So SEO we track really closely too. We've got dedicated landing pages for those customers to come into. We're seeing above our original percentage growth in traffic turning into conversions on those pages. It's early days. It does take a while for that to turn into revenue. So we're seeing converted traffic into customers on the platform as our early indicator, and we're just waiting to see that then flow into our revenue numbers. But we're seeing very, very positive results in both of those strategies.
Okay. And on escrow, I mean, that saw amazing growth recently. And you were talking about seeing a bit more kind of like trends coming through, growth in physical electronic goods. Can you give us a bit more color around that?
Yeah, I mean, we have always dominated in the domain name space and the digital asset space, and so we have a number of broker relationships that encourage that volume in that business. One thing that we did recently is work out, are there certain verticals that we should expand into? And one of the items that we decided to go into is B2B electronics or wholesale electronics. We attended a number of conferences. It was a really natural synergy or replication of our existing product where customers today don't have the trust and transparency in that market. They do want an impartial third party. And so we naturally were the right solution for them. They also want someone that can be a global player. We've got licensing across the US, Canada, UK, Australia. So that really does give that global footprint for them. And that's why we're seeing that strong growth at the moment. There are lots of other categories, and at the back of our 100 slide investor deck, like you said, there is a sort of chart showing you where we think the market is, addressable market is. And there are definitely other categories in there that we're actively looking at. And over the coming years, we'll definitely explore how we expand that product into those.
Excellent. One more question, which has come through online, a bit more of a technical one, but great for a CFO, is that the cash that you have on the balance sheet, does that also include the escrow cash?
So the cash on our balance sheet includes our corporate cash. It doesn't include the escrow cash, which is what we hold in trust. So on average over the year, you can look at our volume. It's probably about 30-40 million of additional cash that's held in trust, which is off balance sheet because it doesn't belong to us. It's just our obligation that we have to pay out to the other side when the conditions are met on escrow. So I wouldn't be treating that in terms of understanding the business. I wouldn't be treating that as corporate cash available to us, but rather just a demonstration of the size of that business and the sort of volume of cash that we do have to manage to support that business.
Great. Some just on the AI side, like, I think you're really all over it. You've been talking about the cost savings which can come through from AI, as well as potential revenue growth opportunities from the matching and the liquidity. Do you have any sense as to what kind of, I guess, any quantitative metrics around what you think this could bring towards the business?
I mean, the numbers out there in the market in terms of what companies are going to spend on AI over the next decade or so are sort of, there's reports saying, trillions of dollars and then reports saying billions of dollars. But the reality is the spend that every company that has to is investing right now and will continue to invest is sort of overlapping with existing spend. So to distinguish AI spend with regular employment spend, it's very difficult to deduction to have. What we see is that we think, and we see it in our data, that it's not AI that replaces human work. It's very much AI that complements human work. And so while token usage, a lot of companies are reporting on, including us, is an additional cost, side, it's to complement existing work and actually improves the productivity of the workforce underpinning it. For us, that's demand. That's both the supply, improves the freelancer quality of the work they do. It's also demand in terms of what they can bring in. We've seen about 7.4% of our Q2 volume is AI specific work. 5% in the first quarter. Where that's going to go, I think is anyone's guess. I probably wouldn't put guidance on it, but I think that it is definitely a huge opportunity, and we've clearly demonstrated that we are someone that companies are willing to go to find that talent, because we have the breadth of that technical talent.
Yeah, I do think you are very well placed in the AI world. I mean, you kind of talked about it here with it being a enabler for a lot of that work, and that analysis that you did on the mix of freelancer jobs not having changed, really illustrates that. I mean, one thing that we did, well, I learned last week is really about how AI is really impacting on the tacit knowledge, and it's not the task, but how you do the task. And I think you guys are very well placed for that. So in an AI world, you do seem like a very defensible kind of company. Um, Maybe if we just talk a bit more about the, well, I guess you're new to the company, relatively new at this point in time. As a fresh pair of eyes coming into the company, can you give any comments as to where you see any potential low-hanging fruit?
Oh, 100%. I mean, I'm coming in after we've had a period where there's a few challenges that we're working on. But the most important thing I've taken away is, like I said at the start, it's a business that has really strong strategic assets that have been built over the past 2 decades that creates a moat, a really strong competitive moat, both in terms of our user base, the composition of the user base, the amount of skills that we have on the platform, in terms of the escrow business, the regulatory licensing footprint that we have, the Loadshift business, the number of carriers that we've got. So the underlying fundamentals of the business is actually, if I'm a value investor, I'm going, wow, it's amazing. The question for us is how do we execute and how do we monetize that to grow the business going forward? And the way that we do that is really around strategic focus, and that you can demonstrate that from ironically, the impairment we did, that's really us demonstrating to our shareholders that we are being focused on our core three businesses. We know what the growth drivers are in those businesses. We know where the total addressable market is. We are diversifying the way we're doing user acquisition. So there's no shortage of things that we're doing to capitalize on the opportunity that exists. And the reason why we can do that is because we've spent almost 2 decades building out these solutions that are quite tangible and quite sizable.
Mm.
I mean, on the cost side, like I said, there are opportunities in our cost base. to do things more efficiently. We still, on our rental, we still pay pre-COVID rent for our Sydney lease, as an example. So when that goes up for renewal in July next year, incoming CFO, of course, I'll be looking at that. But there's, I don't necessarily want to suggest that it's all about cost reduction. This is a growth business. It's
Mm.
about how we reinvest those savings into encouraging growth going forward. And that's really the approach that we're taking. Not just generating free cash flow, but how do we actually invest that in accelerating growth across all three of the businesses?
Yeah. No, that makes a lot of sense. And just if we were to flesh that out a bit, when you do think about the balance between investing growth and achieving your target of consistent free cash flow, what kind of timeline would we be looking at to, target that kind of consistency on the cash flow side?
I mean, I wouldn't give guidance on that, but we absolutely see efficiencies in the short term to be able to return to positive free cash flow. That is something that is a strategic pillar for us as a business, and a priority from a capital management perspective. If we see opportunities though to invest in areas that will encourage further growth, that's where we will be spending that free cash flow that we generate. And I guess the one thing that I very much have said to the team, and the team is working on with me at the moment, is making sure that we really understand the return on those investments and that we are holding ourselves accountable to deliver those returns for our shareholders. We have a strategic business and a set of assets in this business that really can deliver and serve customer needs quite materially. And the addressable market is huge as well. So our biggest challenge is actually more about where do we target as opposed to is there a market to target? There's
Mm.
absolutely enough problems that we can solve out there. But what are the problems that we should solve first, and then second, and then third? That's really what the team and leadership team is really focused on at the moment.
Great. Final question, which is what are the most important operational or financial milestones shareholders should be monitoring over the next year to assess whether the group's turnaround is on track?
I mean, I think the key for our business is always going to be our headline metric, which is GMV. It starts there. If, like I said at the start, our business operates on a model in which, as transaction activity improves in each of the businesses, that starts with liquidity, but then translates into transactions. We earn a fee off the back of those transactions. So how we can encourage additional growth or additional activity in each of our three platforms and growth engines is a really important measure for us, and that's why we highlighted this period. How we then get our USD denominated numbers to demonstrate continued growth, so in terms of revenue line, but also our overall OpEx base. That would be a key distinguishing factor. This business has a lot of fixed costs in it. So seeing the operating leverage start to come through as revenue goes up and our costs remain relatively flat, that's really a measure that I'd probably, if I was an investor, which I definitely am, I would be looking at this business and holding the CFO and the CEO and the rest of the team accountable to. So two things: transaction activity improving and making sure that which feeds into revenue improvement, but really how we get that operating leverage and the earnings jaws start to expand from here.
Great. Well, that's all the time we have for today, but thank you, Dylan. That's been such an informative call just to really be able to understand the business, see that turnaround coming through from Freelancer and, the growth drivers coming through from both Loadshift and Escrow too. Can really see why you guys call yourselves the Amazon of services.
Thanks, Wei. Really appreciate your time, and thank you for everyone that's joined the call. Really good to meet everyone and get to introduce myself and also the business.
Excellent. Thanks again. Bye.
Bye.